Excellent. Well, along the same lines, we're talking about macro liquidity, which is the thing I care so much about. Our next two stories is exactly about this. The next one is about the PBOC. So the People's Bank of China, China in general, they are they are adding liquidity times two. They're increasing spending. They're increasing support for the country on a fiscal level. And I just wanted to play a quick clip from Bloomberg of analysts talking about it, and we'll come back on the other side.
And as we go into that in the next few days, or well, yeah, on the back of all the developments over in South Korea. We'll leave it there for now, but certainly it's still going to be an eventful weekend as we go into that in the next few days or so. Back to China, though. Let's bring in our Chief North Asia correspondent, Stephen Engel, here in Hong Kong for us to wrap what we've heard so far out of Beijing.
Yeah, I mean, a lot of talk, not a lot of specifics. I mean, Annabelle went through that fiscal deficit target, upwards maybe 4.5. They just said they're going to raise that. I think they're comfortable usually with about 3%. So it does indicate, and they have indicated, that they're going to boost public spending and borrowing as well. But the big emphasis this year, the top priority coming out of the Central Economic Work Conference, is to boost overall domestic demand, so boost consumption. And how are they going to do that? And the devil will be in the details, which we probably won't get, in great detail until the National People's Congress in March, since this is essentially what they did behind closed doors the last couple of days, is set the agenda and set the priorities for that NPC in March, the Lianghui, the two sessions. So what do they do? Well, they did talk about some of the drags on consumption, and that is household spending has been pretty weak, largely, too, because of the rising healthcare costs, rising insecurity, lack of confidence. So people have been squirreling away a lot of their money for their own health safety net, their social safety net. And that's something that the work conference talked about. They're going to boost pension support and healthcare and trying to get the households to feel confident and also spend more. So that's going to be the big driver this year. But not a lot of welfareism coming from Xi Jinping.
All right. So when it comes to China speak, it's sort of like Fed speak. You got to be careful. It's never going to be, especially when there's representatives speaking on behalf of the Chinese government, it's never like, oh my God, everything is terrible. Everything out of China, everything's great. We're just making small tweaks in order to make things better. However, China is a centrally run country, and they try to make moves that literally move the entire country one way. Like if they want everyone to go into real estate, they are going to make rules and regulations to make everyone go to real estate. If they want you to buy stocks, they can make you buy stocks and all that sort of thing. So a couple of weeks ago, we talked about they did this massive stimulus in order to get people the stock market back up, and we got this boost in a bunch of Chinese stocks. I don't know if you remember, there was like this run up of like 100% off the lows for a bunch of these stocks. They've all turned over. Alibaba, MSCI, China, a bunch of these assets all turned over, and so now they're like, oh yeah, well things are fine, but we're just going to do another massive stimulus, just to get things back on track. And what we hear here from this analyst, and he says the key words, they're trying to get the feeling of the population into such a place where they will then spend more, because they need the Chinese population to spend. And what they're doing is that they're saving, they're scoring away, which is all recessionary signals, right? That's contraction within an economy. There's government fiscal and monetary spending. The population is not being convinced. They have to do more and more and more and try to get the population to do it. They're not doing it. That means it's recession and bad recession. Why does that matter? China is the production engine of the world, right? So is Germany, but Germany doesn't pump a bunch of money into the system if things go badly. China does. So there's two things here that if you're looking for the trade here, the trade is when China pumps money into the system, Bitcoin goes up. Bitcoin goes up and the dollar goes up because they're devaluing their currency, so the dollar goes up, and then the increased liquidity shows up first, and the asset that seems to be the most liquid of all liquid is Bitcoin. So I think this might be part of the reason why we're seeing, almost certainly this is part of the reason why we've seen such a run up in Bitcoin to 100,000. And when the last stimulus came out, and now with this stimulus over the next 70 days, which is usually how long it takes for the China stimulus to go through the markets, I wouldn't be surprised, just like we saw Bitcoin go from 60,000 to 100,000, for it to go up another 40K. I see that totally in the books.
I can see that path. On a forex play, I would be interested in seeing what happens as the Chinese yuan against the U.S. dollar breaks below potentially 13 cents for the first time in
Right.
quite some time. The one factor I would consider here is that these Chinese uh, stimulus packages are really designed to try to offset the impact of a potential 20% U.S. tariff. There's some research out of Goldman Sachs right now that just came out, and they're trying to anticipate the impact that's going to have on GDP growth into 2025. So I would anticipate that any effect on the currency play would be somewhat short until we can see the effects of GDP by quarter 2, quarter 3 next year. It's going to take some time. And in general, tariffs are going to be fast in terms of their plan, but not necessarily in their execution. I don't expect the actual stimulus plan will get executed very quickly. It was a similar outcome in 2018, 2019 during the trade war between the United States and China. During that period, it was a slow moving process, but there were some trade opportunities that took place on the Chinese yuan during that small window. So this is an area I would be keeping an eye on as well.
So for the I haven't actually asked you. I mean, can I ask you? Are you long Bitcoin now? Are you bullish Bitcoin?
I mean, I do hold some Bitcoin.
No, I mean like in the trade. Let's say for the next 3 to 6 months, are you like, oh yeah, I'm looking for Bitcoin to get to 200K?
Yeah, it's still trending. I'm not at a point now where I think Bitcoin is a sell, or even one I would start to scale out of. There's no question we're in a rally still.
Well, because wanted to make it clear, I said that VWAP was my number one indicator.
Mhm.
Mike's my number one indicator, and VWAP I use as a confirmation signal. Because I go, okay, if because you don't give yourself into the hype, whereas I'm looking at Solana charts and Sui charts and all these different tickers, and I go, should I buy any of these things? And I also like, okay, if Mike hasn't mentioned it, I'm not really gonna jump into
Yeah,
them.
I mean, I'll hold a basket of cryptos over long periods of time, but long run, I'm actually increasingly becoming more interested in maybe just adding to my Bitcoin holdings and just seeing it as another form of a store of value, which is really what I think it is. We've seen a lot of comments from people, even from uh, uh,
Powell.
well, Powell, yes, of course. We know that the Trump administration is very pro cryptocurrency, which is fantastic for the bull run we're in right now. But I think even the story here we have on IBKR's CEO coming up is worth addressing here. I think that there's this sense that because you can't value cryptocurrencies, that makes them inherently worthless. And I'm going to push back on that idea. You can't inherently value gold, yet we still see it as a store of value. And so the argument for holding it long term and it being a potential um, form of currency in the future, and I'm thinking like 30, 40 years down the line, I see Bitcoin as being kind of the winner there. But anyway, that's neither here nor there. So I have two competing problems here. On one hand, I'm trading Bitcoin. On the other hand, I'm trying to hold a little bit of it as well. So there's a long-term play and a short-term play there for me.
It's interesting because I've mentioned multiple times here that as a Canadian, all I want is US dollars. And I will sell my Canadian dollars in a second for anything that's not a Canadian dollar. And for US, I just go, well, why would I? To me, having US dollars is like having gold in my safe. Like, why would I sell my US dollars unless I have to? It's just going up in value versus my currency. It makes no sense. But for Bitcoin, I'll sell out of Bitcoin if I think RSI is too high. But I'll never do that with USD. So I should have maybe a different thought process.
I'll
I
just
just
hold a little
can't.
bit. I'm adding a little bit, and I'm
Yeah.
gonna save it in a hardware wallet. It's gonna be one of those. Okay, I'm just not touching this because I
So how do you feel then with some people who like, let's call the crypto folks who they've denominated everything in their life in Bitcoin,
mhm.
and like they're doing well.
I'm going to go back to, I mean, this was my original theory in 2012 when I first read about Bitcoin. I'm like, great, I'm going to, buy as many of these as I possibly can. And I took Bitcoin to the first $1,200 run when no one really anticipated that it would go from $36 or $37 to $1,200 the first bull run that it really had. When it reached that point, I pulled all my chips because I had no idea what the future of Bitcoin was, and I certainly was no Bitcoin maxi yet. So the trade made more sense to me to get back into US dollar denomination. And then maybe I was ready to buy more later. And I ended up taking another swing and bull run in 2017. And I traded that all the way to Christmas, and ended up selling right around, I think when I started seeing it pull back just a little below 20, I saw how much panic there was in the market. So I joined the panic as well, and pulled my position. And I've since dabbled in cryptocurrency in a lot of different ways since then. But I keep thinking about this idea of going back to 2012, having had, I think at one point I had 400, 500 Bitcoin. I mean,
Jiminy
it
Cricket.
would have been an absolute fortune today. And one of the early uh, platforms where you could make purchases was Overstock. And so I bought items from Overstock using Bitcoin because I was like, well, what's the purpose of this thing? You're supposed to buy things with it, right? I still have items from Overstock that now are the most expensive things I've ever purchased.
Oh my god.
And so you have to ask yourself, like, if you are a Bitcoin maxi, you have to decide at what point you're ready to actually use it as currency. And I don't think we're anywhere near there yet. We have to let this long run 20, 30-year period of stabilization in price to occur before I'd feel comfortable starting to actually spend it. Otherwise, you're overspending for goods, if that makes sense.
That's right. That's what to me the trade, if you will, for someone who is aspirational for crypto, but someone like me who I'm not a really like big believer in Bitcoin itself. I think that the crypto space makes sense. The use case makes sense, and I want to see more things come out from that process. But to me, I mean, to me, betting on it feels like betting on AOL. Like I don't care how big you're telling me that it is. Not you, but the royal you. Um, there's something about a thing that can track every one of my transactions and that anybody can see everything that I've ever done. That to me just goes, well, I don't ever see me ever using that as a as a currency. Someone shows me how they could add a privacy layer on top of that, I'm all interested. And until then, I don't believe it. But increasing my skill set so that I can actually serve the crypto space or things within the crypto space. I think that to me is like unbelievable. That to me is like if when I heard about Twitch, when I was 19, 18, I could have been playing video games and making and learning how to, do YouTube videos. And back then, I don't know if you remember, but people would be like, what are you doing? You're ridiculous. You're playing video games that will never lead you anywhere. And now there's 14-year-olds making $100,000 a year. So playing video games, like, so to me, that's like the crypto space. I'm looking for projects within there that I find to be interesting, dealing with the people in that space. And then I'm sure things will hit, and then I won't be a newbie in that sector. And the same with that SEO for Google, it took off, and you can make $250,000 a year like that
Mhm.
if you knew SEO back in the day where it was about putting white text on white background on the footer of your page. I mean, that's the level of money you can have made for the least amount of effort. So
Right.
that's like the trade I'm looking for. We'll see.
Fair enough. Well, back to, I guess back to China here. I think and one correction from earlier, I had mentioned that the Chinese yuan was a component of the DXY, and that's not correct. It's the
Right.
Japanese yen and a few other currencies. But that said, I still think that the Chinese yuan, as a trade potentially, I'd be looking for a breakdown below that 1361 line right now as a short.
Well, just to add to that, the even though it's not a directly component, it does affect the yen because of the competition in that area,
Sure.
and so there's an indirect effect on the value of the dollar.